Yeah, good day, guys. Welcome to Crypto for Pigeon YouTube channel. If you have not subscribed, please click the subscribe button below. Okay, so today we are looking at futures trading. Uh, um, if you are here or if you click this video, it means you already know how to trade. You understand your technical analysis and your fundamental analysis. If you don't, then no need going into futures because futures is not sports trading. Futures is more risky. Okay, so that's by the way. If you are just opening your Binance or your futures account, before Binance allows you to trade futures, you have to go through a quiz which enables you to understand how the futures work, and you have to answer all the questions to qualify for futures. The futures quiz can be hard, so just calm down to answer all the questions. So that is by the way. After passing the quiz, you are free to access Binance futures. So the first thing to do is to transfer your margin to your futures account. If you go to your wallet, you see we have futures here, we have margin, we have funding, we have spots, and we have overview. So overview means everything in your wallet from sports trading, or the summation of all your assets. Then if you go to sports trading, this will show all your assets, what you have there. Then funding is this feature is used to transfer currencies to a Binance user. Then if you go to margin is like futures trading, but it has a borrow stuff here and where you repay also. But today we are talking about futures. So before you use futures, you have to make sure you have sent USDT to your futures interface. So to do this, you have to go to your wallet, then you go to sports because you transfer from sports. You click on sports, then you click on transfer. Choose futures here from sports to futures. So you click on it and you choose futures, USD futures. You click it, choose your asset. This BTC. I need to send USDT, so you look for USDT here, choose USDT, and you input your amount, then click confirm. So with that, you transfer from your spots, you transfer USDT from your spots to your funding. Okay, so let's assume to your futures. Let's assume you have done that. We cannot trade futures. If you go to trade, look at futures here. So you click on futures. So this is the futures interface. Some people, they don't really understand difference between sports trading and futures trading. So I will just use a minute to do that. The difference between sports trading and futures is that, one, in sports trading you own your assets that you buy. If you buy BTC in a spot, you have the BTC in your account. But in futures, you don't trade the BTC, you are trading the price movement. So you cannot have it on your account. So when you long, like if I buy this Ago, Ago won't come to my account. I'm already trading the futures contract, and the future contract is a contract that represents the value of a currency. So this Ago you are seeing here is not the Ago in sports, it's Ago in futures, but it's representing the sports Ago that you know. So we are not if you buy this Ago on futures, you won't have the Ago on your account. You have bought the futures contract, and you make money as it increases, as the price increases. So you are trading the price, you're not trading the assets in question. All right, the second thing is that in sports trading, you can only buy an asset before you sell. You cannot sell what you don't have in sport. But in futures, you can buy, you can also sell, because it's a future contract. Then the third one, in sports trading there's no leverage, and we are going to talk about that. But in futures there's leverage. As you can see, this is the leverage here. We are going to discuss about that. So but leverage is a feature that allows you to increase your position size. So we're going to talk that. The fourth one is that spot trading is not as risky as futures, because since your profits will be magnified, so will your losses also magnified. So you can't compare the risks in sports to the risks in futures. Okay, so let's go on the some things we need to know in the futures interface. One, USD margin. This USD margin you are seeing here, it means we are trading against USDT. For example, if you watch, anything you see here will be against USDT. This is Argo against USDT, perpetual. So if you want to if you don't understand what perpetual mean, is that the futures contract does not have any expiry date. You can trade it, leave it as long as you want to leave it. So this is the perpetual, that's why it's called perpetual. Then if you go to coin margin means you can use a coin to trade another coin. You are not using USDT, you are using, for example, you can use BTC. You can use BTC to trade against any of your choice. So what the one we always use is USDT, because if you use a cryptocurrency to trade in the futures, as the currency is volatile, you might incur losses. So it's better to use a stable currency, which is USDT, to trade. So that is for USDT and coin. This is options. If you go to options, okay, this is not necessary, so let's leave that. Then this feature here, this candlestick here, it means to see your charts. So if you want to see this Argo chart, you want to check how it is, or if you watch this is a bearish market and this is a good support, you should understand this is a good support, and it started bouncing up back. Okay, so this feature will show you the candle, the charts, and for you to understand. Then leverage, this is the most important thing in the futures. This is why futures is futures. So leverage tells you, as I said earlier, leverage will help you to multiply your margin. For example, if I have just 10 USDT and I want to buy Argo currently, if I click on 10 and I use a leverage of 10, it means I'm timesing my possession power by 10. So it means instead of me using 10 USDT, I'm now using 100. This is how your profit will be magnified and how your losses also can be magnified. So that is the importance of the leverage. It increases your profit and also increases your risks. So if you this isolated, I always use isolated. It means if I'm buying this thing with $10, it means if the trade goes against me, I will only clear my $100 that I use in this trade. But if you click on cross, it means if the $10 you use here finishes, it can go outside to your to the USDT you have in your wallet that you did not use for the trade. You understand? That's why it's called cross. It crosses your margin that you use here to the margin outside. So if you don't want that, some people use it in case, because there's sometimes the market will hit your stop loss and start going in your direction. So instead of you to just lose everything, some people use cross. Those people, they have a high a high margin. They have good funds, so they are not scared of the market. But if you know you don't have big funds, always use isolated. If it's $10 that you use for the trade, that is only what you can afford to lose. All right, then if you go there, these are the futures order. There's only 3 you can use here, or 4. Or you can use all, but the main one is the market. Market means you are buying or selling at the current price. So if I click on market here and I put $10, it means I'm buying at the price of 0.31 at the current price. Then limit, if you click on limit means you are going to set at what price you want to buy. So if after checking my chart, if I see that this currency Argo will go down to maybe 0.29, I can come here and set my limit and put 0.29 here, 0.29, and I put amount I want to use to buy it. If I say $10, it means immediately Argo gets to 0.29, the system will buy it for me. So I can just set my limit and go out. I will not be monitoring it until I see 0.29. So that is the same thing. If you go to the other one, stop limit is like a stop loss sign. it means you have to set two prices there. You have to set the first price, the stop price, where you want the market to reach before it triggers um, your decision or your market order. If you have the stop limit and the limit. This stop limit tells the system that when market gets to this price, initiate my order. So you can use it to manage your loss or manage your profit. For example, if you are making $50 profit, you can set this stop limit so that it will not pass 40 to 30. Like, your loss should not be more than 10. So you can set it here. So this is a futures. Immediately you buy, if you set it on market and you buy, immediately you buy, if you scroll up, your order will be here, open order. It means the trade you just open, you will see it here. If you are making profits, you will see it. If you are losing also, you will see it. Okay, so nothing much. The next difficulty you might have is, if you watch this stuff here, is your history. Use it to check your trading history. You can use it to check your history, how far you have traded, your former trades you have done. That is this button. Then this is the open order, your trade. Then positions also, your trade that is on, that is going on. Okay, yeah. So then secondly, if you want to choose the coin you want, like, you can trade all the coins depending on your analysis. If you click here, just click here, you see this is my favorite. I save them as favorite. But if you click on all, this is, you can select the coin you want, or you just search. If you're looking for maybe Solana, SOL, you click on it. This is it. So you can trade. Always make sure your stuff is isolated, so you manage your loss. Then the last thing is that might be difficult for you, how to calculate your profit. Binance calculates it for you. Sometimes if you see 80%, you will like, how did I get it? It's because of your leverage that you use. So let me explain. So let me go to my calculator. So let's assume Solana is $10, and after buying it, it moves to $11. So if your profit normally on spot will be 11 minus 10, which is 1. That is what you have gotten. If you traded this on spot, you have made $1 for a movement. So let's calculate how much movement. So how many percent? So 11 minus 10 divided by 11 times 100, that is 9%. So the coin moved 9% to give you $1 on spot. So let's see, in futures, if this coin moves 9% and you use a leverage of 10, which means the percentage will be multiplied by 10 in futures. So instead of 9% in spots, because you did this in futures, you're having 9 times 10, which is you're having 90%. So your coin has moved 90% instead of the normal 9%. So what will be your gain or your profit? Your profit will be 90%, which is 90 divided by 100, multiplied by your margin, which is 10. This is this. So instead of making $1 in futures, you have made $10 instead of making $1 in spots, you have made $10 profit in futures, but the same trade and the same percentage movement. Just 9% movement can give you a good cash like this. You see why people are tripping into futures, because of the profit. So, but it's not as easy or as sweet as this. If this coin went against you 10% also, you still lose $10. That means you'll be taken out from this trade. So this is futures. and this is the risks. And so you have to manage your risks by setting your stop loss. Your stop loss, you can use this to set stop loss. This is it. This for stop loss. Let me assume I want to buy this currency now at 37.16. I will just click this and set my stop loss and my take profit. You know what is stop loss already? Stop loss means if this trade goes against you, how much am I willing to lose, or at what point should this trade cut, or should this trade be terminated? So for example, if I am trading this, or if I bought this coin at 37.17, I will use a stop loss of 36.9, so that if this trade is going against me, or this price is going down, when it gets to 36.9, it should cut, it should end. I mean, I've reduced my loss. Instead of me to just leave it and sleep, I might come down and this coin will go down to maybe $34, and you see, and I will liquidate. So instead of me to liquidate, I prefer losing small. I prefer losing like 5% of my capital than losing all. Then take profit means at what point should I take my profit? So I can say, okay, after my analysis, I want to cut this trade at $40. When you get to $40, you should cut. So I will choose $40. I will choose how much am I buying this coin, or how much am I using to buy this coin. If I'm using $10, I click. Immediately I press buy, I will buy, and I've already set my TP and SL. So it's good to understand these things, because sometimes they might give you signals and they tell you Solana against USDT, isolated, leverage 10x, buy, limit order, this you'll be like, I don't understand all these terminologies, or I don't understand all this stuff. But if you have watched this video, I've explained everything you need to know about the price triggers and the buying and the selling, everything the same process. Okay, so guys, this is where we end today. Please don't forget to subscribe and drop comments if you have any difficulty. We always look at the comments. Thank you for watching.